Hello traders, welcome to Investoo.com's Crude Oil Trading 101. In this lesson, we're going to analyze how important volume is when trading crude oil. And if you remember on our course on stock indices, we also analyze volume. But when it comes to crude oil, volume makes for a very, very volatile market. Now, here's the 50-minute chart on crude oil, and this is the last session, all right? Price dropped immensely from the 51.50 level and closed about the 48.68, 65. So basically, we had a $3 drop on crude oil. Now, the drop was not on a straight line, and we had some relief around those levels, okay? The reason we had some relief around those levels is because those levels are important. And when it comes to crude, you have to look for inflection points in the market. What are inflection points in the market? Well, inflection points in the market are those points of support and resistance that are being tested as previous structure. So we're going to go ahead and zoom out on the chart, and we are going to look for them right now. So we have this level that was tested as resistance before we broke to the upside and tested heavily as support before we had that big rally from the 50.35 level to the highs of around 55.60. Okay, so that's an impressive rally, and this is a very strong area of support. Now let's zoom back in a little bit and let's look what happened. Okay, it was very, very difficult to take into consideration what was going to happen with prices on crude oil around these levels. Okay, when we were testing the highs at the 51.64-65 level, you can see that there was absolutely no volume while those highs were being tested. So basically, you can look at volume, and when price is testing a level and we have no volume, then you don't know if we have an actual rejection of this level. If we had a lot of buyers coming in but sellers were pushing price down and we had a spike in volume, then you can say with certitude that this level was going to hold because sellers were in control of that level. Okay? In this case, there was no volume at all. Well, there was volume, but not the amount of volume that is considered average volume in crude oil market. Now, what happened next? What happened next is a huge drop. Okay, and well, it wasn't a huge drop, and let me just zoom in more on the chart so you can actually see the volume spikes. Right here we have a volume spike. Let me get rid of this. Actually, I'm not going to get rid of the rectangle. I'm going to put on this rectangle right here because this was the range that crude oil was trading in. How do I do that? Well, basically, what I'm going to do here is I'm going to use the highs of the range and the lows of the range, okay? You can see that the highs were tested at around 51.64, at exactly 51.64. Well, this was the high around at the 65, so we are going to pick the high of the range. And then we tested the lows again, the lows again, the lows again, and then we went higher, okay? So we were trading inside of this range, very, very, very small range for crude oil, and we were waiting for either volume on the buy side or volume on the sell side to break with this range. We didn't know what was going to happen with crude oil at the time. So what happened is that we had this big spike in volume. And when we had this big spike in volume, you can see that we did not break the range, but sellers came into the market. So that's a clue that price was going to break to the downside. So what are we going to do is we're going to put a sell stop around these levels. Why? Because we were trading inside of a range. Okay, now let me just change the shape of this horizontal line, because we are using straight lines for support and resistance, and we are going to use the dotted lines for entry and stop losses. Okay, so we had this big spike in volume. I'm going to move the vertical line and show you where we were. We were at this on the previous bar, we were still struggling between buyers and sellers, and then huge sellers came into the market. We did not break with the range, but when we had a spike in red volume or sell volume, we knew that we were going to well break to the downside, and this area, the 51.64, was going to hold. So what are we going to do? Then we're going to put a sell stop below the range and a buy, oh, I'm sorry, and the stop loss above the range. So we had basically a risk of around 25 ticks. So with a risk of 25 ticks, what are we going to do? Well, that's easy. We are still going to look at volume when it comes to this position, okay? Now, we had let me just zoom in more and make this bigger. Because if you look closely at my indicator, when we have a sell volume imbalance, which means that sellers are in control, which means that there is more sell volume than buy volume, we only have a red, a red line. But when buy volume is, the imbalance is on the buy side, well, at the top of the red, we have a higher blue, which means that we have more buyers than sellers. Okay, and if we follow volume, you can see that on this specific tick volume line, we have a buy imbalance. And here's where we start to get relief. But then the sell volume starts again and starts to spike all the way down to this bar. Okay, this is the main bar that I wanted you guys to see. We have a huge sell imbalance, and we have price dropping, and by this time we are in the money for 74 pips, which means that we are already in a 1-to-3 risk to reward ratio. And then when this starts to happen, the volume starts to come down, and the buyers are starting to push price up. You can see here on the tick volume bars that we have some bigger blue lines than the red lines. It means that this might be the time to give this trade a rest, because, well, the sell or the imbalance to the sell side is no longer existent. Okay, and we really don't know what's going to happen until more volume comes into the market, such as in this case right here, where we have another volume spike, and right here another volume spike. So basically you have to be very careful when you're trading crude oil. Not only look at the technicals, but also look at what volume is, or how volume is driving price on an intraday basis.